If you're an insurance professional in Kenya, stop what you're doing and give me the next 60 minutes, because what I'm about to tell you could affect your right to practice. In 2025, a law quietly came into force. It wasn't front-page news or widely discussed. Yet, it may be one of the most important pieces of legislation ever passed for Kenya's insurance profession. On June 17, 2025, the President assented to the Insurance Professionals Act, 2025. 3 days later, on the 20th of June, it was published in the Kenya Gazette, and on the 4th of July, it officially came into force. To give the industry time to comply, the law built in a 12-month transitional period, a window for every insurance practitioner to get properly licensed before the requirement became enforceable. That period expires on July 4, 2026. From that moment, the insurance profession enters a new era. The questions are no longer simply, where do you work? Which insurance companies do you represent? Or, how many years have you been in the industry? Instead, the questions become far more important, such as, are you registered as an insurance professional? Do you hold a valid practicing certificate? And, are you legally authorized to practice under the Insurance Professionals Act, 2025? Those questions will increasingly define who can legitimately call themselves an insurance professional. In this documentary, we'll take you through the Insurance Professionals Act from beginning to end. In plain English, unpack what the law actually says, who it applies to, what has changed, the opportunities it creates, the risks of ignoring it, and the practical steps every insurance professional should be taking right now. Whether you've been in this industry for 2 years or 20, stay with me until the very end. Because by the time this documentary is over, you'll understand not only one of the most important insurance laws in Kenya's history, but exactly what it means for your career, your future, and the future of the insurance profession itself. Let's begin. Hello, and welcome back to Insurance World TV, your trusted source for everything insurance, from life, health, motor, home, and business cover, explained the way it should be, clearly, honestly, and without the jargon. Today we're doing something a little different. Instead of talking about a specific insurance product, we're going to go through an actual piece of Kenyan law together. The Insurance Professionals Act, number 5 of 2025, almost like a class. Chapter by chapter. Section by section, where it matters. By the end of this video, you'll understand this law better than most people currently working in the industry. If you haven't already, subscribe and turn on notifications, because I'll be doing a follow-up series once the detailed regulations under this act are published. Let's start with the basics. What is this act, and why was it created? The Insurance Professionals Act, 2025 is a landmark law that transforms insurance into a regulated profession in Kenya. It establishes a legal framework for the examination, registration, licensing, and regulation of insurance professionals through the Insurance Institute of Kenya, IPEB, and the Insurance Professionals Examinations Board, IPEB. The Act introduces mandatory professional qualifications, practicing certificates, ethical standards, and continuous professional development to ensure that only competent and accountable practitioners serve the public. Ultimately, its purpose is to professionalize the insurance industry, eliminate malpractice, strengthen consumer protection, and align Kenya's insurance profession with internationally recognized standards. Now, you may ask yourself, why was this law necessary, yet Insurance Institute of Kenya, IPEB, existed even before this law was enacted? A short answer to this question is, under the old law, IPEB was just a professional association whose professional accreditations was largely voluntary. So, what exactly changes under the Insurance Professionals Act, 2025? First, the Insurance Institute of Kenya is now a statutory body established by law to regulate the insurance profession. Second, the Act establishes the Insurance Professionals Examinations Board to standardize professional qualifications and examinations, which marks a significant shift from an industry where many practitioners entered practice with basic certificates to one that requires recognized professional qualifications, such as AIK, ACII, or other approved equivalents, ensuring a consistent standard of competence across the profession. Third, the Act introduces mandatory continuous professional development requirements so that insurance professionals continually update their knowledge, skills, and ethical standards in response to an industry that is evolving rapidly through technology, changing risks, and new regulations. Finally, the Act places individual accountability at the center of professional practice. For the first time, it creates a comprehensive framework for enforcing ethical conduct, investigating professional misconduct, and disciplining practitioners who breach professional standards. The message is unmistakable. The future of Kenya's insurance industry will be built not only on technical competence, but also on integrity, accountability, and public trust. So, what is the difference between the Insurance Professionals Act, 2025 and the Insurance Act? The Insurance Act regulates the insurance industry by licensing and supervising insurance businesses, governing the relationship between insurers and policyholders, and protecting consumers while promoting a stable and well-regulated insurance market. The Insurance Professionals Act, 2025, on the other hand, regulates the people behind the profession. It establishes who may practice as an insurance professional, sets minimum qualification and registration requirements, introduces practicing certificates and continuous professional development, and enforces ethical and professional standards. What is the difference between the Insurance Regulatory Authority, IRA, and the Insurance Institute of Kenya, IK? The Insurance Regulatory Authority, IRA, is the government's regulator of the insurance industry. It licenses and supervises insurance companies, brokers, agents, and other insurance service providers, ensures they comply with the Insurance Act, protects policyholders, and promotes a stable, fair, and competitive insurance market. The Insurance Institute of Kenya, IK, established under the Insurance Professionals Act, 2025, is the regulator of the insurance profession. Its mandate is to register and license insurance professionals, promote education and continuous professional development, enforce ethical standards, and uphold professional discipline. Simply put, the IRA regulates insurance businesses, while the IK regulates the insurance professionals who work within those businesses. Why was this law needed? Imagine faithfully paying for medical insurance, only to discover after an accident that your treatment isn't covered, or losing your business to fire, only to find your policy had lapsed without your knowledge, or purchasing life insurance based on poor advice, only to realize years later it never met your needs. While many insurance professionals in Kenya serve with integrity, cases of mis-selling, unethical conduct, and inadequate professional competence have eroded public trust. This raises an important question. Who regulates the professionals behind these critical decisions, ensures they are competent and ethical, and holds them accountable when they fail? For many years, there was no single legal framework to comprehensively regulate the insurance profession until the Insurance Professionals Act, 2025. Before this act, almost anyone could call themselves an insurance professional or an insurance consultant without any single, legally backed register anyone could check. If an agent missold you a policy, your recourse was internal complaint to the insurance company and maybe the insurance regulatory authority. There was no formal professional body, no protected title, and no dedicated disciplinary process aimed specifically at individual conduct. This act changed all that. Now let's walk through it, part by part, the way the act itself is structured. Part 1. Preliminary. The definitions. Every law starts with definitions, and normally, we'd skip past this kind of section quickly, but there's one definition here that matters a lot. Section 2 defines an insurance professional as a person who is registered under Section 24 of this Act. Not someone with an insurance job, or someone who's been selling policies for years. Specifically, someone who has gone through the registration process this law creates. That distinction is going to matter a lot later in this video, especially when we get to Part 6, so keep it in mind. The rest of Part 1 just borrows definitions from the older Insurance Act Cap 487 for terms like actuary, broker, insurer, and policy. So, let's move to something more interesting. Part 2. The Insurance Institute of Kenya, the heart of the insurance profession. In the first part of this documentary, we answered one important question. Why did Kenya need the Insurance Professionals Act? We saw that Parliament's vision was to transform insurance from simply being an industry into a fully regulated profession founded on competence, ethics, accountability, and public trust. But passing a law alone cannot professionalize a profession. Every respected profession needs an institution to set standards, uphold ethics, and guide its members. Doctors have medical councils, lawyers have law societies, and engineers have professional boards. So, who will now provide that leadership for Kenya's insurance profession? The answer is the Insurance Institute of Kenya, abbreviated as IPEB. For decades, the IPEB has been the home of professional education, industry networking, and continuous learning. Thousands of practitioners have attended its seminars, earned professional qualifications such as AIK and FIK, and participated in conferences that have shaped the industry. However, before the Insurance Professionals Act, the Institute largely operated as a professional association. The new law fundamentally changes that position. The Act formally establishes the Insurance Institute of Kenya as a body corporate, giving it legal status and a statutory mandate. This may sound like ordinary legal language, but its significance cannot be overstated. The Institute can now own property, enter into contracts, sue and be sued, and exercise the legal powers necessary to carry out its responsibilities. More importantly, it is no longer simply encouraging professionalism. It has become one of the institutions legally responsible for regulating and advancing the insurance profession in Kenya. Why is this important? Imagine two insurance practitioners with similar experience. One continuously updates their knowledge, follows ethical standards, and always places the client's interests first. The other recommends unsuitable products simply to maximize commissions and rarely invests in professional development. In the past, both might have been judged mainly by their sales performance. Under the new legal framework, professionalism, competence, and ethical conduct become just as important as production figures. That is one of the biggest philosophical shifts introduced by this act. The law gives the Institute a broad mandate that goes far beyond organizing seminars and examinations. It is now responsible for promoting professional competence, registering qualified insurance professionals, coordinating continuous professional development, encouraging research and innovation, maintaining ethical standards, protecting the welfare of insurance professionals, and collaborating with local and international professional bodies. Collectively, these functions are designed to build a profession that earns the confidence of both the industry and the public. At its core, the Institute exists to strengthen public trust. Every day, insurance professionals advise families on life insurance, businesses on risk management, employers on employee benefits, and individuals on protecting their financial future. These decisions often involve substantial financial commitments and can have life-changing consequences. The public, therefore, deserves confidence that the people providing this advice are competent, ethical, and accountable. Through the powers granted by the Insurance Professionals Act, the IPEB becomes one of the key guardians of that confidence. The Act also establishes an executive council to govern the Institute. Its membership includes a chairperson and elected representatives from the profession, together with representatives from government and the Insurance Regulatory Authority. This structure is carefully balanced, allowing the profession to govern itself while ensuring that the wider public interest is represented. It combines professional independence with regulatory oversight, a model that reflects international best practice in professional regulation. Beyond governance, the Council is responsible for providing strategic leadership. It oversees the Institute's finances, assets, and partnerships, but perhaps its most important responsibility is shaping the long-term direction of Kenya's insurance profession. The decisions it makes today will influence the quality, reputation, and competitiveness of the profession for many years to come. The day-to-day management of the Institute rests with the Executive Director. The Act requires the holder of this office to be a registered insurance professional with a recognized university degree, substantial industry experience, proven senior management expertise, and the integrity required under Chapter 6 of the Constitution. These high standards reflect the Act's broader philosophy. Professional institutions should themselves be led by professionals of recognized competence and integrity. Another major responsibility entrusted to the Institute is continuous professional development, CPD. Insurance is evolving rapidly. Artificial intelligence, cyber risk, climate change, digital distribution, and new financial products are transforming the industry at an unprecedented pace. The knowledge acquired at university or during professional examinations is no longer sufficient for an entire career. Under the new framework, continuous learning becomes an essential professional obligation rather than an optional activity. Ultimately, the greatest impact of the Insurance Institute of Kenya may not be administrative, it may be cultural. For many years, success in insurance has often been measured by premiums written, policies sold, and production targets achieved. Those indicators remain important, but the Insurance Professionals Act introduces a broader definition of success: technical excellence, ethical conduct, lifelong learning, accountability, and service to the public. These are the qualities that distinguish a profession from simply an occupation. With the Institute now firmly established as the custodian of professional standards, one important question naturally follows. Who qualifies to become an insurance professional? Can anyone simply call themselves an insurance practitioner? What qualifications will be recognized, and what is a practicing certificate? Those questions take us to the next chapter, where we examine the new registration framework and one of the most significant reforms introduced by the Insurance Professionals Act. Part 3. Registration, Professional Qualifications, and Practicing Certificates. Imagine graduating with a degree in insurance, securing your dream job, and meeting your very first client. The client asks a simple question: "Are you licensed to advise me?" Until recently, many practitioners would have answered by mentioning their employer, their academic qualifications, their years of experience, or the insurance company they represent. Under the Insurance Professionals Act, however, that answer is changing. Increasingly, the defining question will be, are you registered as an insurance professional? That seemingly simple question captures one of the most significant reforms introduced by the Act. Professional status is no longer based solely on where you work or what qualifications you hold. It is now grounded in legal recognition through registration. Registration becomes the gateway to professional practice. One of the most important principles behind the Act is that education alone does not automatically give someone the right to practice a profession. Across the world, graduates in medicine, law, engineering, and accounting must satisfy additional professional requirements before they can serve the public independently. Insurance is now moving in the same direction. The Act defines an insurance professional as a person registered under the Act, making registration the legal gateway into the profession. This means that academic qualifications, experience, and job titles remain important, but they are no longer sufficient on their own. Registration formally confirms that an individual has met recognized professional standards and is prepared to be held accountable for their conduct. Question: who will be affected by this law? One common misconception is that the Act only applies to senior executives or insurance consultants. In reality, its reach is much broader. The definition of insurance practice includes professionals involved in selling and marketing insurance products, insurance brokerage, claims settling, risk management, insurance consultancy, and any other prescribed insurance business. In practical terms, this means that the Act potentially affects thousands of practitioners across Kenya. Whether your work involves advising clients, underwriting risks, settling claims, designing insurance solutions, or providing professional advice, the new legal framework is likely to apply to you. The Registration Committee, protecting the integrity of the profession. Every regulated profession needs an independent body to determine who qualifies to join it. For this purpose, the Act establishes the Registration Committee. Its responsibilities include receiving applications for registration, issuing practicing certificates, monitoring compliance with professional standards, overseeing quality assurance, and referring appropriate cases for disciplinary action where necessary. Rather than acting as a barrier to entry, the committee serves as the profession's quality assurance mechanism. Its role is to ensure that everyone admitted into the profession possesses the competence, integrity, and ethical standards expected of an insurance professional. Professional qualifications under the new framework. Naturally, this raises another question. Who qualifies for registration? The Act provides two principal pathways. A person may qualify by successfully completing the final professional examinations prescribed under the new framework or by holding another qualification recognized and approved by the Registration Committee. This is particularly significant because Kenya's insurance industry comprises professionals with diverse educational backgrounds. Some hold AIK qualifications. Others possess internationally recognized qualifications such as ACII or FCCI, while many have acquired extensive practical experience over many years. Rather than excluding experienced practitioners, the Act allows recognized equivalent qualifications, making it possible to maintain high professional standards while accommodating the diversity that already exists within the industry. Integrity matters as much as competence. Professional recognition is about far more than technical knowledge. Insurance professionals routinely advise clients on life savings, retirement planning, business risks, and financial protection. They therefore occupy positions of significant trust. Recognizing this responsibility, the Act identifies circumstances under which a person may be disqualified from registration, including convictions involving fraud or dishonesty, bankruptcy in specified circumstances, and legal incapacity. The message is clear. Professional competence must always be accompanied by integrity. The public deserves advisors who are not only knowledgeable, but also trustworthy. The Official Register of Insurance Professionals. Transparency is another important pillar of the new framework. The Act requires the maintenance of an official register of insurance professionals containing details of registered practitioners, practicing certificates, and other prescribed information. For consumers, this creates greater confidence. Before relying on professional advice, they will be able to verify whether the person advising them is officially recognized under the law. For practitioners, registration becomes a visible mark of credibility and professional standing. Why a practicing certificate matters. Perhaps the most talked about feature of the Act is the introduction of practicing certificates. Registration alone does not automatically authorize independent professional practice. To obtain a practicing certificate, a registered practitioner must satisfy additional requirements, including supervised practical instruction, good standing within the institute, and any other prescribed conditions. This reflects an important philosophy shared by many professions. Professional competence is developed through both education and practical experience. The Act therefore recognizes that classroom learning must be complemented by mentorship, supervised practice, and real-world exposure before a practitioner is authorized to practice independently. Practicing certificates are issued for a limited period and must be maintained through continued compliance with professional requirements, reinforcing the principle that professional competence is an ongoing responsibility rather than a one-time achievement. The transition to the new system. Parliament recognized that thousands of professionals were already practicing when the Act came into force. Instead of disrupting the industry overnight, the Act provides a transitional period during which existing practitioners can move into the new regulatory framework. The detailed procedures, including recognition of existing qualifications, application processes, and transitional arrangements, are to be prescribed through regulations issued in consultation with the Insurance Institute of Kenya. This transition is designed to ensure that professional standards are strengthened without unfairly disadvantaging experienced practitioners who have already made valuable contributions to the industry. A new professional identity. Ultimately, this chapter is about far more than registration forms or practicing certificates. It represents a fundamental shift in professional identity. For many years, practitioners proudly said, "I work in insurance." Increasingly, they may now say, "I am a registered insurance professional." That distinction is subtle but profound. It reflects legal recognition, professional accountability, ethical responsibility, and a commitment to continuous learning. More importantly, it signals to the public that the individual has met nationally recognized standards and accepts the responsibilities that come with belonging to a regulated profession. With the registration framework now in place, another important question naturally follows. Who develops the professional examinations? Who determines the syllabus? Who recognizes qualifications? Those questions lead us to the next chapter, where we explore the role of the newly established Insurance Professionals Examinations Board in shaping the future of insurance education and professional excellence in Kenya. Part 4. The Insurance Professionals Examinations Board, Building a Competent Profession. Every respected profession has one thing in common. Before its members are allowed to practice, they must prove they have the knowledge and competence required to serve the public. Doctors, lawyers, engineers, and accountants all undergo rigorous professional assessments. The Insurance Professionals Act 2025 introduces the same principle to Kenya's insurance profession through the establishment of the Insurance Professionals Examinations Board, or IPEB. You may wonder why the Act created a separate examinations board when the Insurance Institute of Kenya already exists. The answer is simple. The Institute regulates and develops the profession, while the Examinations Board is responsible for professional examinations and qualifications. Separating these functions promotes independence, transparency, and credibility, ensuring that professional standards are maintained objectively. The Act gives the Board a broad mandate. It develops professional examination syllabuses, conducts examinations, awards professional qualifications, accredits examination centers, recognizes equivalent qualifications where appropriate, promotes research in insurance education, and collaborates with local and international institutions to strengthen professional standards. In short, the board is responsible for shaping the future of insurance education in Kenya. Professional examinations are not intended to create unnecessary barriers. Their purpose is to protect the public. Every day, insurance professionals advise clients on important financial decisions, assess risks, settle claims, and design insurance solutions. The public deserves confidence that the people providing these services possess the knowledge, skills, and judgment necessary to do so competently. Professional examinations provide that assurance. However, the Act also recognizes that passing examinations alone does not make someone a true professional. Professional competence is built on 4 pillars: education, practical experience, ethical conduct, and continuous learning. That is why examinations are only one step in a much broader professional journey that includes registration, supervised practice, practicing certificates, and continuous professional development. The board also has an important responsibility to ensure that insurance education keeps pace with an industry that is changing rapidly. Artificial intelligence, cyber risks, climate change, digital insurance platforms, and new financial products are transforming the way insurance is designed and delivered. Professional qualifications must therefore evolve alongside the industry so that tomorrow's practitioners are prepared for tomorrow's challenges, not yesterday's. Another important feature of the Act is its encouragement of collaboration with recognized institutions both within Kenya and internationally. This helps ensure that Kenyan professional qualifications remain relevant, internationally recognized, and responsive to global best practices, creating greater opportunities for students and practicing professionals alike. For students, the Act establishes a clearer professional pathway: education, professional examinations, registration, supervised practice, practicing certification, and continuous professional development. For employers, it creates greater confidence that practitioners meet consistent professional standards, making recruitment, training, and career progression more structured. Ultimately, maintaining professional standards is a shared responsibility. The Examinations Board develops examinations. The Registration Committee oversees entry into the profession. The Insurance Institute promotes lifelong learning. Employers provide practical experience, and individual practitioners commit themselves to continuous improvement. The message behind this chapter is simple. The Insurance Professionals Act is not raising standards to exclude people. It is raising standards to strengthen the profession, protect consumers, and build public confidence in insurance. In the next chapter, we move beyond professional competence to something equally important: professional conduct. Because knowing insurance is one thing, practicing it with integrity is what truly defines a professional. Part 5. Professional Misconduct: The Behaviors That Could End Your Insurance Career. Trust is the foundation of the profession. Knowledge can make you competent. Experience can make you efficient. But neither knowledge nor experience can make you trustworthy. Trust is earned through integrity, and in insurance, trust is everything. Every day, clients rely on insurance professionals to protect their health, businesses, homes, retirement savings, and financial future. That is why the Insurance Professionals Act dedicates an entire section to professional conduct. The Act recognizes that technical knowledge alone is not enough. A true professional must also demonstrate honesty, fairness, and accountability. What is professional misconduct? Section 30 of the Act empowers the Insurance Institute of Kenya to develop and enforce a code of professional conduct and identifies behaviors that amount to professional misconduct. The message is clear. The law is concerned not only with what insurance professionals know, but also with how they conduct themselves. Professional success is no longer measured only by sales, premiums, or production figures. It is equally measured by integrity and ethical behavior. Mis-selling insurance. One of the most common forms of misconduct is mis-selling. This happens when a practitioner recommends a product that benefits them more than it benefits the client. Instead of understanding the client's financial needs, they focus on earning a higher commission or meeting a sales target. Professional advice should always begin with the client's interests. The best insurance solution is not the most expensive product, it is the most suitable one. Conflicts of interest. Insurance professionals are expected to provide objective advice. When personal financial interests influence professional recommendations, that objectivity is compromised. Whether it is recommending a company because of a hidden financial interest or failing to disclose a relationship that could affect professional judgment, conflicts of interest undermine public confidence. Transparency is essential. Where a conflict exists, it should be declared and managed appropriately. Confidentiality and data protection. Insurance professionals routinely handle highly sensitive information, including medical records, financial details, personal identification documents, and business information. Clients disclose this information because they trust it will remain confidential. Sharing or mishandling confidential information, whether intentionally or through carelessness, is a serious breach of professional responsibility. Respecting confidentiality is not simply good practice, it is a professional obligation. Fraud and dishonesty. The Act treats fraud and dishonesty as some of the gravest forms of professional misconduct. This includes submitting false information, manipulating claims, falsifying documents, inflating losses, or deliberately misleading clients or insurers. Such conduct not only harms individual clients, but also damages public confidence in the entire insurance industry. One dishonest practitioner can undermine the reputation of thousands of ethical professionals. Gross negligence. Not every mistake amounts to misconduct. Insurance is a complex profession, and genuine errors can occur. However, gross negligence goes beyond an honest mistake. It involves a serious failure to exercise the level of care expected of a competent professional. Failing to process important client instructions, overlooking critical policy requirements, or ignoring obvious risks can have devastating financial consequences for clients. Professional competence requires diligence, accuracy, and attention to detail. Respect, fairness, and professional behavior. Professional misconduct is not limited to financial matters. The Act also addresses discrimination, harassment, and abuse of professional position. Every client deserves fair, respectful, and impartial treatment regardless of age, gender, disability, ethnicity, religion, or social background. Likewise, every workplace should be free from intimidation, exploitation, and sexual harassment. Professional authority exists to serve others, not to abuse power or take advantage of vulnerable clients, colleagues, or junior employees. Why ethics matter. Insurance is unlike most products. What customers buy is not a physical item but a promise that someone will stand with them when disaster strikes. That promise is only as strong as the integrity of the professionals behind it. When practitioners act ethically, public confidence in insurance grows. When they behave dishonestly or irresponsibly, confidence in the entire industry suffers. That is why the Act treats professional ethics as a matter of public interest, not merely an internal company issue. Professionalism is a daily choice. Professional misconduct rarely begins with a major scandal. More often, it starts with small compromises, failing to explain policy exclusions, ignoring a client's concerns, taking shortcuts, signing documents without proper review, or placing personal gain ahead of the client's interests. Over time, these seemingly minor decisions erode professional integrity. Ethical practice is therefore not an occasional obligation. It is a daily commitment reflected in every conversation, every recommendation, and every decision. The bigger picture. The Insurance Professionals Act fundamentally changes how success in insurance should be measured. Sales performance and business growth remain important, but they are no longer enough. The law asks a far more important question. Can the public trust you? Because insurance is built on promises, and every promise depends on the integrity of the professional making it. In the next chapter, we will examine what happens when those professional standards are breached. Who investigates complaints? What disciplinary process does the Act establish? What penalties can be imposed? And what rights does an insurance professional have during disciplinary proceedings? Part 6. Discipline, Due Process, and Accountability. What happens when things go wrong? Every profession is built on standards. But no matter how rigorous the training or how strong the ethical code, there will always be individuals who fail to uphold those standards. The real question is not whether professional misconduct will occur, but how it should be handled when it does. The Insurance Professionals Act answers that question by establishing a structured disciplinary framework based on one fundamental principle. Justice must be fair to everyone, fair to the complainant, fair to the public, and fair to the insurance professional whose conduct is being questioned. Discipline is about protecting the profession. Many people hear the word discipline and immediately think of punishment. But that is not the purpose of professional discipline. Its primary role is to protect the public, preserve confidence in the profession, and ensure that anyone accused of misconduct is held accountable through a fair and transparent process. In other words, discipline is about maintaining professional standards, not settling scores. The disciplinary process. The Act establishes a disciplinary committee to investigate allegations of professional misconduct. However, investigations cannot begin on rumors or assumptions. The process starts with a formal statement outlining the allegations, which must be provided to both the committee and the practitioner under investigation. This ensures that the practitioner clearly understands the case they are required to answer. The Act also guarantees adequate notice of the hearing. The practitioner must be informed of the date, time, and venue at least 14 days in advance, giving them sufficient time to prepare their response. This reflects one of the most important principles of natural justice. No one should be condemned without first being given an opportunity to be heard. The right to be heard. One of the strongest safeguards in the Act is the right to representation. A practitioner may appear personally or be represented by an advocate during disciplinary proceedings. This recognizes that professional registration and practicing certificates are valuable, and any decision affecting them should only be made after a fair hearing. At the same time, the committee is empowered to investigate allegations thoroughly. It may summon witnesses, require the production of relevant documents, administer oaths, and examine evidence before reaching a decision. The objective is simple. Decisions should be based on facts, not rumors or speculation. Fair but firm. Unlike a criminal court, the disciplinary committee is not bound by strict rules of evidence, allowing it to consider information that helps establish the truth. Its proceedings are generally conducted in private to protect both the complainant and the practitioner while the matter is under investigation. This helps ensure that reputations are not unfairly damaged by allegations that have not yet been proven. The Act also makes it clear that ignoring the disciplinary process is not an option. If a practitioner fails to appear after receiving proper notice, the committee may proceed with the inquiry in their absence. Similarly, witnesses who fail to honor a lawful summons without reasonable cause may face legal penalties. Possible outcomes. After reviewing all the evidence, the committee makes its decision by majority vote. Where professional misconduct is established, the law empowers the relevant authorities to take appropriate action, including suspending or canceling a practitioner's registration or practicing certificate, depending on the seriousness of the offense and the provisions of the Act. These are serious consequences, but they are only imposed after due process has been followed. The Act strikes a careful balance between protecting the public and protecting the rights of the practitioner. Why this matters. Strong disciplinary systems do not exist because the profession distrusts its members. They exist to protect the honest majority. Every unethical practitioner who escapes accountability damages the reputation of thousands of dedicated professionals who serve their clients with integrity every day. Ultimately, the Insurance Professionals Act is not designed to create fear. It is designed to build confidence. It says to every insurance professional, you will be recognized, respected, and trusted as a professional, but with that recognition comes responsibility and accountability. That is the foundation of every respected profession in the world. Now that we have explored the institutions, registration requirements, professional examinations, ethical standards, and disciplinary framework, one final question remains. What does all this mean for you? Whether you are an insurance agent, broker, underwriter, claims professional, student, employer, or consumer, the final chapter brings everything together by explaining how this landmark law will reshape the future of Kenya's insurance profession. Part 7. What the Insurance Professionals Act means for you. After exploring the Insurance Professionals Act chapter by chapter, we arrive at the question that matters most. What does this law actually mean for you? Every law is ultimately judged by its impact on people's lives. Whether you're an insurance agent, broker, underwriter, claims professional, executive, student, or simply someone who buys insurance, this act will shape how insurance is practiced in Kenya for years to come. If you are an insurance agent, you are often the first person the public associates with the insurance industry. Every conversation you have shapes how people perceive insurance. The Act raises the expectations placed on you. Clients will expect more than product knowledge. They will expect honest advice, ethical conduct, and recommendations based on their needs rather than commissions. The role of the insurance agent is evolving from salesperson to trusted professional advisor, and that shift can only strengthen the profession. If you are a broker, underwriter, or claims professional. For brokers, the Act reinforces the duty to remain independent and always place the client's interests first. Professional credibility, transparency, and ethical judgment will become your greatest competitive advantages. For underwriters, the Act recognizes that underwriting is not merely an administrative task but professional decision-making. As new risks such as cybercrime, climate change, and artificial intelligence emerge, continuous learning will become essential. For claims professionals, professionalism goes beyond processing files. Claims are often handled at the most difficult moments in a client's life, and how those moments are managed determines whether people continue trusting insurance. Technical competence must therefore be matched with empathy, fairness, and integrity. If you lead an insurance company, the Act is not only about individual practitioners, it will also influence how insurance companies recruit, train, and develop their people. Employers will need to invest more in professional development, mentorship, ethical leadership, and continuous learning. Organizations that embrace these standards early will build stronger reputations, earn greater customer trust, and remain more competitive in the long term. If you are a student, perhaps no group has more to gain from this law than insurance students. For years, many graduates have wondered what comes after university. The Act now provides a clearer professional pathway: education, professional examinations, registration, supervised practice, practicing certification, and continuous professional development. Insurance is increasingly being recognized alongside other established professions with structured career progression and recognized professional standards. If you are a consumer, even if you never work in insurance, this law still matters to you because it is ultimately designed to protect your interests. When you seek professional advice, you deserve confidence that the person advising you is qualified, competent, ethical, and accountable. While no law can eliminate every dispute or guarantee every claim will be paid, stronger professional standards should result in better advice, better service, and greater public confidence in the insurance industry. What this law does not do. It is equally important to understand what the Act does not do. It does not guarantee that every insurance claim will be paid. It does not eliminate fraud overnight. It does not replace the role of the insurance regulatory authority. And it does not mean that experienced practitioners must begin their careers all over again. The Act provides for a transition period and anticipates regulations that will guide the industry's transition into the new professional framework. Like every major reform, its success will depend on effective implementation. A new opportunity for the profession. Every profession reaches a defining moment. For Kenya's insurance industry, this could be that moment. The Insurance Professionals Act gives the profession an opportunity to redefine itself, not simply as a business that sells policies, but as a respected profession built on competence, ethics, and public trust. That opportunity belongs to every insurance practitioner. Ultimately, the success of this act will not be determined by Parliament alone. It will be determined by the everyday decisions made by insurance professionals across the country. Every honest recommendation, every fairly settled claim, every properly explained exclusion, and every client whose interests come before personal gain. The Insurance Professionals Act 2025 is far more than another piece of legislation. It is a declaration that insurance professionals occupy a position of public trust. And with that trust comes recognition, responsibility, and accountability. If we embrace those principles, not simply because the law requires them, but because professionalism demands them, this act has the potential to transform Kenya's insurance industry for generations to come. Thank you for joining me throughout this documentary. I hope it has helped you understand not only what the Insurance Professionals Act says, but more importantly, what it means for your career, your organization, and the future of insurance in Kenya. If you found this documentary valuable, please like, share, and subscribe to Insurance World TV. Until next time, stay informed, stay ethical, and stay professional. Because insurance is not just about protecting property. It is about protecting people, their dreams, and their future.